Time for a big picture discussion on a big week as the S&P set to close at an all-time high, and now the Russell's joined in with a 1% rally. Even China stocks are up. Joe Mazzola and Michelle Gibley joined me this afternoon. Michelle's Director of International Research and Joe's Director of Trading Education Services at Charles Schwab. Afternoon, guys. Joe, I mean, this is about as good as bulls could ask for, I guess, to get this year back on track.
Yeah, I mean, it's interesting, Oliver, because, you're looking at earnings surprises that are declining or at least moving in the negative direction, especially in the financial sector. You did see some weak trades off that last week, but boy, oh boy, that rotation back to tech has been strong. I think a lot of it just has to do with what you're seeing in the interest rate space as interest rates are climbing. People are just kind of moving back to what worked last year, right? You're seeing a lot of that movement back towards the mega caps. They had really strong week, given the fact that information technology is up almost 2% on the week. Communication services are up on the week. But, the real laggards, there's materials, energy, utilities, real estate. They're all down around 2.5%. So it hasn't been a broad rally. It's really been targeted amongst a few names and a few sectors.
Yeah, broadening out a bit, but to your point, not quite the same type of thrust that we had in late last year. When you look around the world, Michelle, does it seem like the U.S. can instill enough animal spirits to get other countries' stock markets on track too?
Well, I think, a lot, as was just mentioned, a lot of the gains so far for the S&P 500 have been in the mega cap tech stocks that led for a big part of last year. With the interest rates in the market going up a little bit lately, if you look at it on an equal weighted basis, the equal weighted S&P is down year to date. And so really, we're going to be looking back towards central banks. Next week, we get a slew of them, not the Fed, but we get the ECB, the Bank of England, Bank of Canada, Norway, and Japan. And inflation recently ticked higher in December, and that's across a lot of regions globally. And central bankers are, indicating a reluctance to start cuts too soon and then having to stop or reverse course. So, next week, if central bankers continue to push back on market expectations for the timing of rate hikes, stocks could be vulnerable.
Tell me kind of what our baseline should be from those other central banks. How will they respond to warming inflation? Because our stock market just ramped right through our warm CPI. We kept the odds of a cut above 50. What do you expect to hear from the rest of the world?
Yeah, it's interesting because the ECB, we had Christine Lagarde really push back on the timing of a rate hike to the summertime. And so the rate hike expectations for March have now gone down to 14%. And if you look toward May, the meeting after, rate hike expectations there are really a coin toss. And that's despite the Fed, kind of still, 50-50 for March. That seems surprising to me. We'll see how, like I say, central bankers try to change the expectations of the market going into the next couple meetings.
Do you think non-Fed central banks have sway in this market right now, Joe? I mean, the dollar seems to be generally pretty range bound. Even after a nice pop up off the lows, it hasn't disturbed stocks, neither have higher yields.
Yeah, I mean, not to this point. Like I said, it's really been a rotation trade that we're seeing. And look, Oliver, next week we got some pretty important data that'll come out. Not to mention earnings, as we're talking about some of the mega caps. We got Netflix, we've got Tesla next week. So those will set up for the mega cap trades and whether or not they can continue to push forward. But in terms of economics, you got GDP, durable goods. And then, winding out the end of the week is going to be PCE. And if we have any indications from kind of what we saw in the CPI and the PPI data and kind of how that's, shown disinflation has kind of leveled off a little bit, that PCE number is going to be really, really important because the Fed has already told us many times over that that's what they're kind of keeping an eye on is that core PCE. And so that print next week should be an important one to keep an eye on.
All right, I agree. CPI, a little second place runner to PCE, so we'll see how the market responds to it. Right now, it's got a lot of momentum going into it. Thanks, guys, for the perspective. Michelle Gibley, Joe Mazzola. Nice way to close out the session there. Bells in 60 seconds. We'll see how high we can push. See you on the other side.